What's up, everyone? It's Karthik with Money Vest. So markets here rolling over just a little bit. The Dow Jones was down over 200 points or 61 basis points right ahead of elections tomorrow. S&P 500 slightly down about 28 basis points, and the NASDAQ here down over 33 basis points on the day as well. I actually posted a brand new video on the Money Vest Index and the buy signals that we got from 18 years. This is a lot of historical analysis. This is about a 30-minute video going over the beautiful index that we have, and of course when it is striking some buy signals and how to deploy capital into the market. So this is an index which, in my opinion, is going to change your way of investing and trading and looking at the markets forever. So if you want to get access to this, link's going to be down below. We'd love to have you on board. There's a few more spots left on the MoneyVest community, and you get access to the entire website as well as all the trade alerts, the options alerts. Everything's going to be included, and the first week of the month is the best time to join, of course. And you can also lock that price in before the next price hike that happens in January of 25. So there's 2 more months left before we increase the prices again on the platform, because we're introducing new features pretty much every single month. So $154 billion worth of losses, with Mag 7 coming in almost $100 billion losses, Big 3 coming in with almost $12 billion, and of course top 10 over $133 billion loss, and of course Palantir coming in with a huge pop of all-time highs at almost 13% higher on a very, very strong beat at over 10 cents earnings per share, revenue coming in well over $725 million, and also raising expectations and guidance on their entire year as well. So nice little pop here, pushing up almost 13% on the day. Vertex Pharmaceutical also reported their numbers. They're more or less flat here, with earnings coming in just over $4.38. Reported revenues are just over $2.77 billion. And NXPI, this is another semiconductor company that was also scheduled to report numbers after the bell. They are down, however, down a little bit over 5.4%, despite beating earnings expectations at $3.45. Revenue coming in at just a small miss at $3.25 billion for the company. Now coming over to the market snapshot. So if you take a look, S&P 500 is slightly off by 3% from its all-time highs. The NASDAQ is down over 3% from its all-time highs as well. The Dow Jones is also down over 3.5% from its all-time highs. So all the indices, the major indices right ahead of the election day, are off by 2 to 3% from their all-time highs, with some of the major stocks here, Magnificent 7 in pullback/correction territory, with Apple in a pullback down 6.5%, Meta's down 7%, Microsoft is still off by over 12% in a correction from its all-time highs, Nvidia 5.8%, Google also accompanying Microsoft here in a correction down almost 12% from all-time highs, and Tesla still having a really hard time finding any type of momentum off of that 270 resistance, 41% down from its all-time highs, still in a bear market. Now, tomorrow's elections, this is the road to 270 electoral votes, and it's really going to boil down to the 7 swing states that we have in the US. That's going to be Wisconsin, Michigan, Pennsylvania, North Carolina, Georgia, Nevada, and Arizona. Of course, most of the United States looks red, which is going to be the central part, and of course the East Coast, the West Coast, very much blue. And this right here are going to be the 7 swing states, which account for 93 electoral votes here. And more importantly, it's really going to come down to Pennsylvania, and more specifically Nebraska as well, which I'll get to in just a minute. But these right here are called the blue wall, and of course this is what Trump flipped in the 2016 election to win the presidency, which Joe Biden then flipped back in 2020 to win the presidency himself. So it's really going to come down to Harris holding the fort up in these 3 states, Wisconsin, Michigan, and Pennsylvania, and of course for Trump to try to flip at least one of those states and hold the other 4, which are going to be your Nevada, Arizona, Georgia, and North Carolina. Now, if Trump obviously wins these 4 states here down south, and Harris holds the blue wall, it's going to be a very good deadlock, which we haven't seen in over 200. Well, that's going to happen if Nebraska, of course, comes in the favor of that split vote as well. But if this happens here, then Nebraska really is going to be the tiebreaker for Trump and Harris. So tomorrow, get ready. It's about to get real crazy. It's going to be probably one of the most contested elections that we've seen in a very, very long time. And this right here is switching gears a little bit. This came out over the weekend, which I think is also very, Very crazy report, as Warren Buffett's cash is now sitting at well over $325 billion as he sold another 100 million shares of Apple and keeps on selling Bank of America as well. So Warren Buffett is now sitting on more than $325 billion. That's actually no small amount. That is a lot of cash for Warren Buffett, continuing to unload billions of dollars worth of Apple and Bank of America shares this year, and continuing to collect a steady stream of profits from all the Berkshire Hathaway's assorted businesses without finding any major acquisitions. So Berkshire sold off more Apple shares in the third quarter after having its massive investment in the iPhone maker, and the stake now is valued at under $70 billion. I mean, that is a very, very significant sign that he's literally just starting to get out of Apple at this point, and he's really just, raising a lot of cash. And this position was worth $174 billion at the end of last year, and so just in about a 9-11 month period, he's reduced that position quite dramatically here by more than 50%. And Berkshire said Saturday that investing gains again drove its third quarter profits to upwards of $26.2 billion, or $18,272 per Class A share. That's the earnings per share right there. And a year ago, unrealized paper investment losses dragged the Omaha, Nebraska-based conglomerate earnings down to a loss of $12.7 billion, or just about $8,800 per Class A share. Now, Warren Buffett is not one for holding this much cash. I mean, this is a lot of cash, right? $325 billion. I mean, the cash pile continues to increase, and I do think there's a couple different reasons for it. Number one, which is the most obvious reason that many people would try to assume, is that, okay, he knows something that we don't. He knows something about the economy, something about the world, something about the markets that the general, regular investor doesn't. And that's why he's getting ready and he's preparing for what could be some significant buying opportunities down the road. If there is any type of hard landing, if there is any type of policy mistake from the Federal Reserve, there could be significant buying opportunities in the market. Because look, Warren Buffett is not, for sitting in so much cash. Yes, the yields have been higher. Yes, they've been north of 4%, closer to 5%. So that $325 billion still is making billions of dollars every year on interest from the Treasury Department, which is, again, the bonds that he's been buying. But at the same time, it is nowhere near close to what he would be investing in, right? I mean, he's known for beating the market. He's done that for over 60 plus years. He's been doing it for long enough that he understands that, money well invested is worth more than having it just sit around in cash. So this is, again, the most obvious reason the $325 billion is a huge cash pile, and everything seems overvalued or overexpensive or something that's not worth investing in at the moment. And he's waiting for the right opportunities that may be on the horizon, according to him. Of course, time will tell. The second reason, though, it could be that he's getting ready to transition over the entire Berkshire Hathaway empire to his successors, right? People who are going to succeed him after he's no longer around. And I think it's really just their decisions to move funds out of his holdings, and then of course finding a way to invest how they see fit. Now that could be the second reason, is what I could think of, because he's Charlie Munger's of course partner, and it's going to be soon time that, of course, of course, I hope that, Warren Buffett is going to live forever. But realistically speaking, there's going to be a time that every single company, every firm has to go through this process of appointing a successor and figuring out a transition plan, right? That's in the best interest of investors. And I think that might also be the reason why he is getting rid of some of his holdings, so that the newer people, the successors that come in, can invest based on how they see things and based on their philosophy and their culture and their investment style. Because at the end of the day, of course, he is managing Berkshire Hathaway's portfolio, right? Those are the funds that he's managing, that he's investing for other investors. So that could be a couple reasons, but yeah, the first one is quite dreadful. If you think about it, $325 billion cash sitting on the sidelines for Warren Buffett is a pretty big deal. And if he's not able to find any places for that cash, I mean, maybe we're in a market that is very, very overbought and overexpensive right now. Now, Citi, on the other hand, says that Powell will remain dovish as softer inflation jobs de-risk rate cut plan. And they said that Powell is likely to suggest that rate cuts could either slow or accelerate, but the Fed chief is unlikely to endorse hawkish bets for a Fed pause amid recent data showing a softer pace of inflation and slower job gains. And instead, we believe that he will have options open for either slowing or accelerating rate cuts at 2 p.m. Thursday. and a dovish message relative to market focus. Now, this I think is going to be a very important day as well. Thursday, November 7th at 2 p.m. Eastern, we're going to get that report from the Federal Reserve. Right now, the markets are pricing in for a nice 25 basis point cut. However, I do think that 50 basis points last meeting was not the best move. I think we could have started with 25, and we'll see what happens with inflation. I think that's really what it comes down to at the end of the day, is if Powell decides to cut another 25 basis points, what is going to be the state of inflation moving forward? Are we going to see some acceleration? Are we going to see some nice little pullbacks in inflation, or that disinflation to continue? That's the real question. Now, speaking of Palantir coming in with one of the best pops that we've seen in over a long time, hitting a new all-time high, well over 12.7%. So congratulations, everyone, to all the Palantir traders, investors. 10 cents in earnings per share versus 9 cents expected, and $725 million of revenue. And customer count grew 39% year over year. And they said, and I quote, "We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down." And for 2024, the company is now guiding revenue in the range of 2.8 to 2.809 billion. And that's up from the range of 2.74 and 2.75 billion dollars for the company. So for fourth quarter, the company is now guided revenue between 767 and 771 million versus analyst estimates of 742. So coming in with strong beats on EPS, revenue, raising guidance, and guidance was raised above expectations from analysts as well. So of course, it's going to be a very, very strong pop for the stock here. Now, coming over to the market concentration to better understand what was actually moving up and down. So if you come over to sectors, energy did really well, pushing up over 1.7%. The bond market also pushing higher. I talked about this over the weekend video. Real estate, materials, and staples, again, very, very defensive parts of the market, gaining a lot of momentum here on the day. Utilities was down over 1%. Financials, healthcare, discretionary, comm services, technology, everything was pretty much red on the day here. Now coming over to volatility here, sitting at just a little bit over 21.9, so just shy of 22. And again, don't forget, tomorrow and Thursday are two really big days for when the volatility could be a little bit more crazy. And if it pops out over 23 or as much as 29 or 30, that's going to be our cue to start deploying capital into the market. And that's really the plan. For me personally, I'm ready this week. I've got cash sitting on the sidelines, about 15, 20,000. And if volatility does spike here, I will be getting ready with my shopping list, which you can also access on the MoneyVest platform. There's going to be about 29 stocks here that you can access with my buy targets, light buys, heavy buys, no-brainer buy targets, as well as my fair values, which you can pretty much take a look at and figure out your own plan. Because if the MoneyVest index does drop to less than 3.3, or below 3, then that is going to be some very good buying opportunities, which I also addressed and mentioned in this update, right? So the MoneyVest index gives us a very good buy signal that we can use to then, guide our investing decisions. So that right there, volatility just a little bit shy of 22. Keep a close eye on where we are tomorrow and on Thursday. Crude oil prices pushing back up to over $71, $72 a barrel. So they're up a little bit over 3.4% at the moment right now. And the 10-year yields are starting to roll over, as we discussed on our channel over the weekend, as the 10-year treasuries are kind of hitting that level from the lower high inside this downtrending channel. So it's possible that we do see some weakness from the 10-year treasuries. And as a result, TMF and TLT were very good trade ideas for this particular week and for the weeks to come, considering how oversold we are and, of course, how much we've been selling off. Now, coming over to SPX, pulling back, as I said on Friday, don't take the bait, because I do think there is maybe a little bit more downside here left for the markets, and support level is going to stay put at 56.70. So that right there is going to be that level to watch for S&P 500. And of course, coming over to the NASDAQ, and this right here is the rising wedge, which we are now starting to break down from a little bit further. So again, Friday, don't take the bait, 80 basis points higher. But today, of course, down about 30, 40 basis points. Support level is going to stay put at 17,700. So that right there is going to be the level to keep in mind next for the NASDAQ. And that's going to put us down a little bit over 5%. Nice little dip in the market. And that's going to result in some buying opportunities, of course. And I will be deploying capital into the markets. So hope you all enjoyed this video and a complete update on the markets, of course, S&P 500, NASDAQ, and where we are. Tomorrow, elections. Thursday is the FOMC. We still have a lot of earnings to take care of. And technically speaking, volatility is still pretty elevated. MoneyVest index is down in the neutral zone. Markets are showing signs of weakness. So support level is going to stay put right about here, 17.7. with S&P 500 also sitting roughly around 5670 as the next support. I think that's going to put us down a little bit over 4%, just under 4% from our all-time highs. So not a huge correction, not a huge crazy sell-off, but yes, something definitely to keep in mind. And one more thing I want to mention very quickly, and I'm going to give you a little bit of a taste of what we discussed in our MoneyVest Index video, which I think is very, very useful. This right here is what 2024 looks like. And this is what I shared with everyone in that video as well. So what we have done is that we have categorized the MoneyVest Index values between a normal buy, a light buy, a heavy buy, and a no-brainer buy signal. So when the MoneyVest Index is at 3, it's a normal buy signal. It's at 2.5, it's a light buy. 2 is a heavy buy, and 1.5 or lower, it's a no-brainer buying opportunity in the market, because what it's really doing is it's giving us a nice little gauge of the risk reward in the market. And so lower the level is, the better the buying opportunity will be. And you can see that in 2024, we've really only seen 2 normal buying opportunities, one in April and one in August. That's it. The markets have been so strong this year that we've only really seen 2 serious normal buying opportunities. And that's what we try to do. That's what we try to analyze. It's quality over quantity. It's not like we're trading every single day, every single week. Of course, for options portfolio, I am trading every single week. I'm putting out trade alerts every single week, and the weekly updates will also go out. But when it comes to serious deployment of capital into the market, I only do that when the risk reward is in my favor, when there are deals out there, when the markets are coming down to some very, very good profiles on the risk reward ratios. And this is one of my metrics that I use to help me understand that better. So hope you all enjoyed this video, find it helpful. Make sure to drop a like. Again, link's going to be down below if you want to get access to the entire update, MoneyVest website, trade alerts, watch these members only videos. Link's going to be down below. And as always, happy investing. I'll see you all in the next video.